Anytime that something happens in markets that creates uncertainty, generally stocks go down, risk premium go up. If you wait until the uncertainty goes away, then everything reprices, it's much more likely to go back to fair value. So the best time to be an investor deploying capital is in a period of maximum uncertainty. Whether it was COVID, now the tariffs, the financial crisis, each of these events that seemed catastrophic, it was an amazing time to deploy capital. And I think one way to do it is just by buying market indices during periods of time. But if you're an investor and you can do real work on companies, if you can actually find the great businesses that get mispriced during that period, you can make even more money. As an investor, you should get excited anytime it gets exciting, anytime it gets uncertain, and the clouds come in, the storm is going, that's when you want to have capital to invest. I would say patents are not that protective generally. Usually what creates durability is that the company gets to a certain kind of market position to become the category leader. They offer a product or service that their customers love. They're at a certain scale that is difficult to disrupt, and they can do things that companies of smaller scale would have difficulty sort of challenging. I mean, think of the market position of Amazon, for example, right? It's an impossibility to create a new Amazon. Think about a Costco, right? A business that has enormous buying power, has a business model where their customers are effectively subscribers, and they continually work to keep the product at the cheapest possible cost and the customer experience great. If you look at the companies we own, think about Uber's market position. You want an app that gets you a car that is going to be clean, run by a professional driver that's done several thousands of rides, and the car's going to come quickly. So you want the biggest network of cars. Universal Music has 40% of the recorded music market share in the United States, a third kind of globally, incredibly dominant market position. Hilton, the biggest network of hotels, extremely well-managed company over a long period of time. Think about how hard it could be to create another Hilton, right? There are lots of businesses that seem like good businesses. One of the tests I use is, if this business disappeared tomorrow, what impact would it have on the world? And there are a lot of companies that if they disappeared, it really wouldn't matter much. But if Amazon disappeared, it would have a very significant impact on people's lives. Same thing's true for Hilton. Same thing's true for Universal Music. Same thing's true for Uber. A software company that solves one specific problem, that maybe someone else could solve. Most companies, I think, that make things, like that make products, it's harder for them to have very durable kind of competitive advantages. So we tend to be investors in, I would say those are the kind of characteristics that we look for. And then you want to couple it with a balance sheet where you're always going to be able to make the right decision without regard to short-term financial pressures. And the ability to do that will allow them to continue to extend kind of the barriers that make it difficult to compete. And we like businesses that generally are not too reliant on some unique technology, sort of pure technology type companies, because the probability of someone else introducing a better version of that unique technology is high, particularly in an AI-enabled world.